For more, let's bring in Stephen Cates, financial analyst with Bankrate. Stephen, good to be with you. A lot going on, but first, let's start with these tariffs here. As we heard from Owen, President Trump says it's going to be, quote, the greatest thing that we've ever done. However, as we know by the looks of the stock market today, it really was a wild ride, and investors really don't seem to agree with this. I want to get your take on all of this.
So the stock market is allergic to uncertainty, and that's quite a bit of what we have right now. That's the theme dominating both economic and consumer forecasts.
And many folks, as you know, too, are worried about how this may impact their 401ks. What would you say to them?
Well, it is impacting it right now. So to those people, I say, be patient. It's not time to panic. As much as bad news is out there, and certainly everywhere at this point, drops in the market like this, they happen. This is still not nearly as bad as it was in 2022. And I think people just need to be patient and look back at where they were in September of last year, which is just about where the market is today.
Yeah, so kind of hold the line. Do you think we're in for more pain?
Yes. I don't think this is necessarily the bottom. I think that the market could be volatile, meaning that it could go both up and down. But I think the uncertainty over what will ultimately happen with tariffs, what's going to happen with jobs, which is cooling. We are seeing labor market weakness, and we have impending federal layoffs. And I think all of that's going to continue to sort of roil the market.
Yeah, and while the tariffs on Canada and Mexico, they're on hold for right now, of course, recession fears on this trade war are growing. In fact, the president did admit while talking to Fox News over the weekend that there will be some disruption, but we're okay with that. He said, Stephen, what do you think he means by disruption? I mean, what could be coming down the pike?
Well, I think certainly we're living through a little bit of disruption right now. I think whether the market continues to sort of have this panicky, protesty moment is certainly going to be up in the air a little bit. I think for a lot of people, this is kind of like jumping into a cold pool. The anticipation of it is worse than the event. I think waiting to see what's going to happen with jobs numbers next month, with tariffs, with all of these sort of future economic impacts, people are sort of frantic about it.
Yeah, and maybe speculate a little bit what this means for Main Street, for you and me, consumers, small businesses. How do you think we could be affected in the short term, at least?
Well, I think the gentleman that you spoke to a moment ago, the small business owner, anybody who runs a small business certainly is probably worrying about their bottom line, worrying about what's going to happen with the inputs to their business. Manufacturers certainly should be, with tariffs on steel and aluminum. So I think that can come down to the consumer, with higher prices, slower business growth. If jobs and other labor market inputs cool, that is going to ultimately hurt the spending for the consumer, which basically runs 70% of our economy.
Yeah, that's short term. We'll see what happens long term. Wait and see. Thank you so much, Stephen. We appreciate it.
My pleasure.